Are you finally ready to buy a house? Are you concerned as you watch the interest rates climb higher and higher? Should I buy now with a lower rate, or maybe save some more money to increase my down payment? And how do I factor in the average 10% increase in home prices every year? Today I'm going to answer these questions, and I'm going to give you 5 tips in getting qualified for the home that you want to buy right now. All of these questions are very important, and frankly, all of these factors are totally interrelated. If you wait to save more money for a higher down payment, that effort may be nullified because the interest rates went up. Save 1% from 4 to 5%. Also, if you wait to save more money for a higher down payment, that effort may be nullified because home prices increased 10%, which is the average for Utah. But if you don't have a large enough down payment, you may have to pay PMI, or private mortgage insurance, to cover the difference between a 20% down payment and anything less than a 20% down payment. Also, could you take advantage of any special government financing which is available, where you don't have to make any down payment? Your job may pay you a 1099 versus a W-2. Do you get bonuses? Do you get commissions? How would child support or alimony change things? Do you have any investment income from any rental properties? As you can see, putting together the right home buying strategy is complex, and that's even before you start looking for a home. However, it is extremely important to get your ducks in a row before you start looking for homes, because invariably you will find that perfect home on the perfect lot at the perfect price, only to find out that the underwriter for your loan needs more information that'll take you 3 weeks to get. And at that point, you may lose the home, and in worst case, you may lose some earnest money. So why does all this matter, Robert? I just want a loan to buy a house. Well, the first thing you need to find out is how expensive a home that you can get a loan for. Now, there's nothing more frustrating than finding the perfect home and finding out that you can't qualify to buy it. And you're going to have some options that will affect how much of a home you can buy. You can put more down. You can put less down payment. You can even buy down the interest rate to make your monthly payment less. You also need to factor in what the taxes are going to be for the home that you like. Certain areas have higher taxes. You'll also need to factor in how much of an HOA you have to pay every month. So tip number 1, I would ask my loan officer to give me what is the maximum home price I can qualify for if I put down a certain amount. And what is the maximum home price I can qualify for if I put a little bit more down, or maybe a little less down. I want to know this before I start looking for a home. What is my maximum home price with no HOA fee? How about if I have to pay $25 or $50 or $100 or $150 per month or more? By the way, if you're looking for a condo or a townhome, this is very important because almost all condos and townhomes have an HOA. And HOA fees can go from $25 a month to $500 a month, depending upon where you live, depending upon the amenities of the townhome and how old the complex is. If you get into a bidding war, you may need to know this information before you put an offer in. And you may not have time to go back to your lender and find out. Maybe a Saturday. Find out also how much extra cash you can come up with if needed, and how fast you can get it. In other words, if you're cashing in a 401k or some other investment. Ask your lender if there are any special programs that you may qualify for, like first-time homebuyer programs, veterans, medical, etc. You may not want it, but it's nice to know. And this is very, very important. Your loan officer at this point is probably just giving you a pre-approval letter based upon what you told them as far as your income, debts, and credit scores. They will need to verify all of that information that you gave them within about 2 weeks once you go under contract to buy the house. Tip number 2, find a loan officer that either has in-house underwriting or has a good reputation for getting the loan closed without last-minute panic. Sit down with that loan officer and go over all the details that they need. And don't hide anything, because it will come back to bite you at the last moment. If your loan officer is sharp, they will already know what their underwriter is going to need to get you final approval. You may think the loan officer is asking some silly questions occasionally, but he or she knows what the underwriter is going to come back with as conditions a week before closing. And it's better to get that information to the loan officer today than a week before closing. Tip number 3, help the loan officer build a solid file to hand to the underwriter with all the T's crossed and all the I's dotted. The underwriter is going to want to ensure that 1, you've paid all your debts in the past, which is your credit report, and 2, that you can pay them in the future, which is proof of income and your debt ratio. When they look at the credit report, there may be some debts on there that you're positive you paid off, but they're still showing up. Your loan officer can help you get those removed, but you need to do it now because it could take a while. Something to think about, that it's a little bit harder to prove your income when you're paid commissions. In that case, you'll need tax returns to average out your commissions over the past couple of years. When your loan officer asks for information or proof, Get that information to them now. Don't wait. And don't be frustrated if your loan officer doesn't know everything the underwriter needs on day one, because as new information comes in, the underwriter may need something different based upon what you just sent them. Also, try to get something to the underwriter as early as possible, not 3 days before closing. Tip number 4, here are some items that your underwriter will probably ask for. First is a credit report. Second is a 2-year employment history and 2-year residency history. Third is proof that you have enough savings to pay your down payment and closing costs, which usually is a bank statement. Fourth is income worksheet. What is your income? What are your debts? 5, pay stubs, usually the 2 most recent ones. 6, your W-2 and your 1099s. 7, personal tax returns, usually 1 or 2 years. And if applicable, 8, business tax returns, usually 1 or 2 years. And 9, your last 2 bank statements. 10, once you look for a home and go under contract, they will need real estate purchase contracts and any addendums. They'll also need a copy of your earnest money deposit. So here's some other items that they may need. A rental agreement to prove that you have paid your rent in the past, a divorce decree, bankruptcy paperwork, any trust paperwork, any child support or alimony paperwork, any retirement paperwork, any disability paperwork, and any 401k or investment paperwork if you use net income. Tip number 5, do not do anything that changes your financial profile. Don't pay off or incur any new bills unless you check with your loan officer. Don't change jobs, because if you change your credit profile, you may become non-qualified to buy your home. And every realtor knows of horror stories in which a buyer signed the paperwork on a Friday, then over the weekend they bought a big truck, or they quit their job, or they had some other big change to their credit. In those cases, the lender would not fund the loan, and the buyer would lose all of their earnest money. So wait until a couple of days after you move into your new house to make any big changes. So with all the information that we've covered, you'll be well on your way to getting the home that you desire with the fewest hiccups. By the way, I recommend watching 2 videos on buying a home, one in Salt Lake Valley and the other in Utah County. Please subscribe, and I'm here to answer any of your questions. Thanks, and have a fantastic day. See ya.